Okay, so a moving average is very, very simple. Okay, you have different types of moving averages in terms of sometimes you've got a simple moving average or an exponential moving average. They're very, very similar and I don't need to get worried about them too much. The most important thing to know about a moving average is that the length of the moving average determines how it's calculated. Okay, so I have two moving averages loaded up on my chart here now, and what I'm going to do is I'm going to show you a couple of them. So I've put on here a 20 period moving average. Now what that is doing is that's showing me the average price over the last 20 periods. So I've got a daily chart up here. Don't forget the period means whichever time frame chart you've got loaded up. So I've got a daily chart loaded up here and I've got a 20 period moving average. So this line here, which is the blue line, let's just thicken it up a bit so we can see for this. There we go, nice thick blue line. That is plotting the average price for the last 20 days. So you can see it basically lags price, but it just shows you, it just smooths out price. You know, if you didn't have price on there at all, you just get an average view, okay, and you don't get to see the highs and lows, but you just get to see how the market has ebbed and flowed over that day. So that's a 20 period. If I was to move this to a 200 period, obviously that is going to show me the average of the last 200 days, a much smoother average. So the higher number you go, the more days you're taking into account, the smoother it's going to be. And then you can go right down to whatever you want. I mean, obviously you can adjust it to whatever you want. Or 5 period, which is going to give me really tight average of the past 5 days, and there's some strategies we can use from that. But generally speaking, people are going to use 20 period, they're going to use 50 period, and they're going to use 100 and 200 because it just depends on what you're trying to achieve. Obviously then if you go down to, let's say, a 1 minute chart, you can still use the same thing, and let's say using a 50 period as we are now, that's basically giving you the average price over the last 50 minutes or the price of the last 10 minutes, whatever you have that set at. So it's multiplied by the time frame setting you've got on your chart. Very useful for seeing just a general trend of the market, and a lot of people like to look and see whether the price is above or below. Some people have a strategy where they will sell if the price crosses below a moving average and buy if a price crosses above it. Another way of doing it is to have two moving averages on your chart. So let's thicken this up a little bit. This one is a 5, but let's put it into a 10. Okay, and let's make it a little bit thicker so we can see it. Normally I wouldn't have it so thick. And you can see now some people use several moving averages to judge, to filter out their trades. They might say, for example, okay, we've got a 50 period moving average here on a 1 minute chart, and we've got a 10 period moving average. I will buy when the small moving average, the 10 period, crosses above the 50 period. So I will buy here, and I will sell when the moving average crosses back below. So you can see if you'd have done that, then in this random example we've just picked up here, you're going to be long from this point here, and then you're going to exit at this point here. And if you were doing it strictly, maybe you go short as we broke under it and you cover it as we broke up through it. So now you're getting to a point where you may be taking a trade right at this instance. So that's what a lot of people do. It's called a moving average crossover system, and a lot of people do look at that. They may not necessarily trade it as such, but maybe they use it as a filter. So if we use a 15-minute time frame and we said, okay, well, while the moving average is below, I'm always going to look for shorts. While the shorter period is below, I'm going to look for shorts. While it's above, I'm going to look for longs. There's plenty of permutations on that, but it's just basically giving you, an average price depending on what different parameters you're going to put in. And later on in the course, I'm going to show you a nice little strategy where I use the 20 period moving average to really get a grip of trends and get on the end of trends.